Hey guys, Brian Horton with BK Trading Academy, professional trader, owner, and educator. Now, I'm going to get bold in your face and say, should you quit trading? Okay. Straight up, should you quit trading? Now, you may think that it's weird that an educator like myself is saying, should you quit trading? No, you should never quit trading. But there are actually people who I believe should quit trading. And the reason why is everyone can't be a trader. Just like everyone can't be the president of the United States, or everyone can't be a mechanic, or everyone can't be, a supervisor at McDonald's. It doesn't matter what it is. Everyone has specific roles in their life that they feel comfortable doing. So number one, if you're being a trader because you want to get rich quick, I think you should quit trading. If you really feel like you have to chase the buck and get rich and get money really fast, you should absolutely quit trading. Trading is a journey. You should take your time and learn properly. There's a whole set of rules and things that I can go into that I won't go into much in depth in this video. But if you're looking to turn a buck really fast, especially if you're new, or even if you're not new and you just haven't been consistent, you should definitely stop trading, because trading will eat you up. The market will definitely eat you up. All right, so that leads me to number two. If you're too emotionally attached to when you're losing trades and you're emotionally drained, you should stop trading. So I'm going to give you the remedy to this, actually to number one and two, but you should never be emotionally attached. And I'm going to tell you why. I know that we're attached to our money. I know that we want to grow, but you have to have a specific strategy, a trading strategy, and a risk management strategy to overcome that. All right. So number one, some of you may not even have a strategy at all. And some of you may have a strategy. I'll just say 50-50. The 50% of you guys who do have a strategy and are losing, one or two things are happening. I can guarantee you. One, you're not following that strategy and you're letting money or greed or the market overcome you mentally. Or number two, you are following that strategy and your strategy is completely garbage. I'm just going to throw it out there. It's completely garbage. So you want to have a tried and tested strategy where it's been back tested hundreds of times, where you've actually traded it in demo hundreds of times and you journal it every single time to the T. And you know that every single time when your rules are executed during your trading strategy, that you have a higher percentage chance of profiting than you do not. So what I mean by that, let's just say you had a strategy that every single time the RSI hits the 80 level, you're going to sell. But there are times where people will wait for it to hit 75 and they say, you know what, it's not quite 80, but it is close enough. I'm going to sell anyway. That's not following your plan. I'm saying follow it to the T. If it doesn't hit that 80 level, stay out of the market, and you want to have it tried and tested. Okay. So we have 3 profitable strategies. Our academy can attest to it, that we do not execute it until every single thing is met. And that's why we are between 90 to 95% profitable, throwing our trades in our academy and our private Discord community with our community, because we execute it every single time. So you don't even have to ask yourself, should I get in? You should know if you should get in if you're executing your strategy every single time. Now, greed can say, I'm going to get in early because I don't want to miss it, and don't have a strategy for that. Now, you can get in early if you want to, but just make sure you put that in your trading journal and that you know that, hey, if price goes against me, I'm okay with that because I have it in my trading journal. That's a part of my trading strategy, and I'm completely fine with that. So even if your strategy plays out to the T, and it hits your stop loss, you should be at peace because you followed your strategy to a T. All right, so that's number one. That's number two. Now let's get into number three. All right, so number three, you should absolutely quit trading if you don't have the time to trade. Now, this could be temporarily, but if you don't have the time to trade or to practice to trade, then you should absolutely quit trading until you have the time to trade, because trading takes practice. Now, Kenya, she is a big fan of journaling. She journaled every single trade every single time, and she makes sure and she documents that to get results. Not just back testing, but she actually journaled every single live trade, take pictures of her screen throughout the trading process, put it in her journal, and then document it. And because of that, every single time a setup is set, she knows when to enter and when to exit and when not to enter. We don't like to chase the trade. We let the trade come to us. So if our rules say the RSI needs to hit 80 before we sell, we wait for that trade to hit 80. I don't care if it's 79. If it's 79 and you enter, yeah, you make profit. But if that's not according to your rules, if you didn't put it in your trading journal, do not execute it. All right. So if you don't have the time to trade, then you shouldn't be trading, because you don't have the proper time and the proper mental capability to actually trade. You should have the time to trade during the session that you want. So if you are more free during the New York session, you should know throughout the New York session, I'm going to trade New York pairs because that's when it's more volatile. Document every single trade, write down a trading strategy because this is your business. You should have a trading plan, right? Just like any other business, Chick-fil-A, Costco, anything, they have a written plan for every single procedure throughout their entire business. So you should have a plan for every single trade that you take. And you should even have a plan when not to take a trade. And I always say that 90% of the day of a trader is actually waiting for a trade to set up. The more trading strategies that you have, the more you can execute that trade. But I recommend that you take the time to study one trading strategy from your mentor or from whoever it is, a tried and tested strategy, at least a 70% or higher win rate, and execute it every single time. All right, so number 4, proper risk management. I'm going to throw that in your face, and I think everyone can attest to that, including myself. You know, especially when I was a new trader. I'm 13 years in trading right now. I've traded from futures, I've traded stocks, I've traded Forex, and risk management plays a huge role. And that's why, to be honest, a lot of people are not profitable. Risk management can simply mean fractional lot sizing. All right. So if you have, let's say, $100 to play with, you can break up that $100 and put in different entries in different places throughout your trading chart. Okay. So if you think it is a good time to enter, but if it pulls back against you, I can put $1 here and then I can put another dollar underneath and I still have $98 to play with. So you want to make sure that you break up your lot size and so that you're not throwing all of your money into one basket. And that's what we teach in our academy, is to break your lot size up. And we use a Forex calculator to determine our risk, our daily risk. Okay, so if we have $3,000 in our account, we say we're going to risk no more than 2% of our account. We break that up. Now I understand how much money that I have to play with in the market. And then I break up that lot size so that I can get more bang for my buck. Okay. So fractional lot sizing. Number 2, placing a stop loss away from structure. You have to understand if you're in an uptrend or a downtrend. You have to understand your support and resistance key levels. And then you place your stop loss above or below those key levels, depending on which way you're trading. So there are a whole bunch of different risk management strategies that you can place. Those are just 2 to name, but risk management is absolute key. You never risk no more than you can handle or lose. And oftentimes we're so busy wanting to chase the buck that we just don't care. And we'd rather completely wipe out our account than trade 10 cents a pip. Now, does that make any sense? Trading 10 cents a pip, you can actually make $25 to $50 trading 10 cents a pip every single day, making profits slowly, than just throwing a whole standard lot size of $1 or $2 or $3 and wiping your account out in a couple of days. So understand the power of trading very, very small lot sizes, gaining a little bit of money until you master your trading strategy and your trading psychology, then putting everything into the market on its own. So risk management. All right. So that leads me to number 5. Number 5, you should absolutely quit trading if you don't have a mentor. Now, the mentor doesn't have to physically be there with you. You can have a trading mentor on a book, somebody who's an author or someone who's on YouTube who you know is profitable. But I actually believe someone who you can actually communicate with, whether if it's online or in person, someone who you can communicate with, someone who you can actually take a trade with can be a really great mentor. And you want to make sure you check their track record, obviously. So that mentor will hold you accountable. You can ask them questions. Should I get in this trade? Although I have my trading plan, should I get in this trade? Because I'm not absolutely sure. They will provide you with a strategy, a tried and tested strategy that they will actually trade with you. If you don't have a mentor who will actually trade with you side by side, whether if it's online in Discord or if it's in person, face to face at a library or at your home, then you can actually find someone on YouTube, which can be a little bit more riskier if you can actually speak with them. And this is one of the reasons why we have a private Discord and even a public Discord. If you didn't know about our Discord is below, where we have a public Discord. Anyone can join. And then we have a private Discord only for our students, in which we actually trade our strategies, live trade, and we give them signals, but we give them signals not to make them profitable, but we give them signals just to show them that the strategies that we're actually using are playing out. We hate to handicap you guys by just giving you signals, but we tell them why we are giving you signals. We tell you why we're entering. Based on this particular strategy, every single time you see it laid out, you should enter. And we put it in. We're buying on our own as well, and we label the take profits, we label the stop losses, and so therefore we're between 90 to 95% profitable. If your mentor is not telling you to journal your trades, I don't think that's a good mentor. If your mentor is not telling you to develop a trading plan, then that's not a good mentor. If your mentor doesn't provide you with a trading strategy, a logical trading strategy, that's not a good mentor. If your mentor is giving you a strategy only based on indicators, In my opinion, that's not a good mentor because indicators are lagging. They follow price. You should understand price action. You should understand key levels and technical analysis. And then indicators are only there to help you in confirmation. So guys, those are my 5 reasons why you should quit trading. Let me know, guys, in the comment. I want you guys to be bold really quick in the comments if one of these reasons is a reason why you should actually be quitting. And it's completely fine if you quit. Everyone isn't meant to be a trader, but just know that if you can manage those 5 steps, you can definitely become a profitable trader. You need the time. You need to master risk management. You have to take the emotional psychology to another level so that if you hit a stop loss, you're okay. Your stop loss should be minimal because you are using fractional lot sizing, right? You shouldn't lose any more than just a small bit, 2% of your account at max if you hit a stop loss, if you had the right proper risk management plan. All right, guys, so that is it. I hope that this benefited you. Please give me a thumbs up, like, subscribe, and comment. A lot of traders aren't going to just get in your face and say things like this. And I'm just being real. Everyone isn't meant to be a trader, but everyone can be a profitable trader. All right, guys, I will see you in the next video. And I really appreciate you guys for watching. Have a blessed day.